What's going on, everyone? It is John Salama, CMT. You're watching Trading Trends. This is Rocco, the all-time high Maltese dog, although no new all-time highs today. Let's get into it. I hope you enjoyed watching or you logged into Stock Market TV today. I was on the morning show. We discussed some charts we're going to look at today here. Also, don't forget, if you're a trader, June 17th, come out to Ulysses in FIDI, New York City. Come on out. We will be talking all things markets. Let's get into it. One portfolio trade today. The portfolio is a little bit nimble right here. I bought PFIX today, which is an interest rate hedge. A lot of things going on with a very broken bond market. Let us get into the screen share and let's get into it. It's been a back and forth day this morning, to be honest. Let me get the themes of the day, and so you'll be on top of it too. This is what mattered so far. It is 1 p.m. Eastern time. Let's get into it. Ethereum, there's been a crypto, call it a crash, but it is getting sold off here. I've been pretty negative on Bitcoin. I talked about it this morning as well. Just not a fan until I want to be a lazy trader on it. Buy the breakout when it gets above the 85K. I really don't care for Bitcoin if it doesn't surpass that level. It's not doing anything. There's many other parts of the market that are much more attractive today. They are, I don't want to say liquidating, but Ethereum and Bitcoin are down about 4.5%. We'll take a look at the up to the second live stats here, and what caught a bid is the United Kingdom. That is up. I haven't seen that in a while. This one used to be big back in like March, from what I recall. We'll take a look at the charts. I remember being long that name. And communications. We'll see if Meta or Google, usually one of those two culprits that are lifting that whole basket. And regional banks. We're talking about this group, pretty dramatic group. Usually they overextend to the downside and to the upside. Today having a decent rally, up 1.5%. Let's get into it. First, starting with the ETHA tape and everything else. Hope everyone had a splendid weekend. We got a mini heat wave here in the East Coast. The next couple of days, we'll keep an eye on nat gas. Nat gas usually reacts to weather like this. So let us get into it. All right, here's the dashboard panel. Micron down 5%. Yikes, although it's up, I don't know, 155% year to date, so I guess it could shed 5. NVIDIA down 1.3%. Don't forget, those guys report earnings. They're an off-cycle reporting company this Wednesday. Going to be massive report. Take a look at that. Qs, a little bit of back and forth here, but down about 75 bips now on the day. Intel down 2. You see a lot of the tech going south today as is semis after having really a great period. Tesla down almost 3%. AMD down 1.3%. Bitcoin we'll get to down 3% to 76K. Just not my cup of tea right now. Crypto almost looks like AI has figured out a way. I was talking about this a little bit this morning too. I think AI needs crypto. Crypto needs AI. So with one accelerating and semis going to all-time highs, basically, it's interesting to find the drawdown that Bitcoin continues to find itself in from the October peaks. NASDAQ has lifted through new highs. Much of the emerging markets, frontier markets, all-time highs. Bitcoin is still dragging. I know it's the all-time leader of assets here on the asset quilt since inception of that white paper 15 plus years ago. We'll take a look at it, but Bitcoin and Ethereum looking especially weak. Google, there's the culprit, lifting XLC up 1.2%. Meta going the other way, down 70 bips. Microsoft flat. Apple down 1.5%, but don't forget, this is nearing almost $300 here. Amazon, as I said, flat. Broadcom down 1%, and Taiwan Semi down 2.25%. Let's get to the intraday tape here. So it's been back and forth. We opened here, and that was pretty much the peak of the day right at the open at 9:30. We hit 741, and they said no thanks. Actually got a little bit of volatility at 10:30 a.m. They swung it below the short-term VWAP there. It was 739 even, and we actually hit a low of day just literally before I came on air about 35 minutes ago. We pierced 734 in SPY, and now we have a sliding intraday VWAP that looks to be our resistance here. That live up to the second is 737.80, and you have a rising 200 bar moving average, each one constituting 30 minutes. This is really just noise here. It looks like they're not strong appetite for bid. As I can tell, we haven't had any trading above 50 RSI basically 30 minutes after the open. So curbed enthusiasm for sure in terms of markets here. As I zoom out, we get away from the noise and we get more into a longer, more enduring trend here. The 1 year chart on SPY, up and away here. We finally stopped being overbought. We're basically under 66 RSI. This is insanity for the first time since April 15th. So folks have finally said, you know what, let me get out of this bidding line for just right now, and let me maybe look elsewhere. This has literally been 4 weeks and change of just a rip-roaring rally. Again, VWAP on that day, April 15th, was fair value 698 that day. We've taken it all the way to 750 on the 14th. That was your all-time high just 4 days ago. So absolutely insane. What I see here, again, I'm a big cycles guy. It works for the most part 15 days on, off, depending on the volatility and relative strength of the underlying asset. I have this leg of the rally beginning right around May 5th. So that is here. And a couple ways to do that. I look at extension of when we enter this new gear of RSI, if you will, holding that 71 and continuing. As you can see, this blue shaded area has not stopped until just today. So again, May 5th, 15 days. I said this bullishness should last on or around the 20th, which last I checked is this Wednesday. Still pretty much, agree with that assessment. Although I do want to say this candle looked amazing on the 14th, looked absolutely stellar. And then today, don't like this one here after a down day on Friday. We lost 1.2% then. And today, an ugly looking candle. We're under VWAP. Always want to see what happens between that very important power hour of 3 to 4 o'clock. But again, trees don't grow to the sky. We've been going up. I just said 50 points from 700 to 750, essentially in a straight line. I know a little bit of dabbling, just a Christmas tree here, red, green. That's a lot of strength. What I'm seeing now is not quite the sell in May and go away type stuff, but I do see a 2-week digestion of these gains. Absolutely normal. You can't have the best absolute meal in the world and expect not to choke on it. If you just, chipmunk it and you just, chew, you got to digest those for a little bit. And this gravestone doji, I don't like to see. That looks like it was a little bit of a punctuation here, and that looks like we're going to be at 750 for a little bit. May 14th looks like to be the high. I think it's absolutely normal for the next 2 weeks going into on or around June 5th for us to be at about, I'm just taking a simple reference, 21-day exponential moving average, right around that 725 line. So it's about 12 points away or inside of 2%, I think 1.7% back of the cocktail napkin type math. So it's an absolutely normal digestion. Pick your spots. Be careful if you're going to chase. We're going to go through some high movers here. Use the 2 ATR rule, 1.5 if you want to play things a little bit tighter to the chest. And that's about it. This candle right here, especially if we close underneath 737.60 in SPY, will let me know it's very likely we're headed to 725 in the next 2 weeks. So you can buy puts, you could buy or sell those calls. The 750, collect that theta once it really starts to go south inside of 21 days. So that would line up essentially with those June 5th almost expiration. So I kind of like the idea of selling those 750 calls, buy something else against it. NVIDIA could blow this out and have guidance for God knows 2028 saying they're sold out until the next generation of who knows what. So always want to be protected. But for right here, this formation right here looks like it absolutely can and should take a breather. Some other indices domestically have already started doing this, believe it or not. We'll see which ones we capture here. So like I said, look for a little bit of a digestion period up until down to about 725. Trades that stick out, really more so just being conscientious, picking your spots. This is absolutely an insane period that we had a couple days after the ceasefire through just today. So an absolutely amazing Shea Gilgeous-Alexander type run. Congrats, 2 years in a row MVP. I know he gets a lot of calls, but crazy with the conference final starting tonight. And again, this old area here of many, many tests of resistance is very likely due to the price discovery that's happened here for months and months, 2 quarters, 3 quarters embodied here. There's a lot of information there. It looks like to be the new floor, and that's 700 right here. So if you were, complaining, saying this market's too expensive, I'm not going to buy it, we'll get it cheaper later, good luck. I think that old ceiling is your new floor. All right, so again, to summarize on this, 2 weeks or so, trees will go to the sky. I think you'll start seeing a little bit of digestion in the S&P. Let's get into what is moving today like rapid fire, because there are quite a few things. Let's get into the first one. We'll go, as always, up first and then down. First, big up mover. So there's a couple, not a ton, but there are a few in a down tape here. Don't forget, the Qs are down 70 bips right here, similar with the small caps. So this is why I was saying the UK peaked back in February. I was right. I remember getting into this position many times. And look at this chart. This almost looks like the gold chart. Nothing close to the 200-day moving average. The only time even with the vol expansion, it touched, not in terms of price, but just in terms of almost forecasting the Bollinger Band. We got close here when it was getting close to those former highs mid-April, and then started to go south. So right here, we're at an important line here at the 50 RSI. So, neutral, but having a big day today, the UK up 2.25%. A little bit, a great looking chart, messy in that it's rallied to this point, and we're just at 50 RSI. I think this has to correct in price. In terms of time versus price. I wouldn't want to touch this right here for 2 weeks. I don't think it's going to do a ton. I almost want to sell the 47.5 calls or the 48 calls, but it's UK, EW, and liquid. You're not going to get paid on this anyway. But to me, this almost feels like a sell strangle. But I think this one heads lower. It's great looking tape today. It's holding VWAP. Oh, of course, Rocco wants to leave. But he's had enough. He's not a Brit. Okay, Rocco. Yeah, go think about it. I'm sorry about that, y'all. Dogs have needs, apparently. Yeah, I just think this is going to be in the penalty box for about 2.5 weeks. It's going to be tethered, I think, very close. Not a lot of vol in here to about 46.5 where we are. But no real trades. I also see the relative strength versus SPY lately in this name versus past 3 weeks. It's been getting its butt kicked. So essentially range bound is kind of what I'm seeing here from the RSI as well, just living between 55 and about 40. Don't like the lower highs here either, and then technically the lower lows. I just don't like this one for the next 2 weeks. I don't want to just outright buy puts in the global bull market. But kind of looking alluring as selling the 47.5 June calls. Buy something against it if you must. But again, option chain not liquid in this. I'm highlighting the mover simply, and not much in terms of obviously buying a breakout. And it's not a great, just straight up short candidate. But the UK, they are bidding up today, up 2%. Number 2, XLC. We're talking about, love XLC typically, but this one has peaked back here in also February, similar to the UK. And then, of course, 2 weeks after the war started, this one, similar like beta and most of our domestic indices here, had a very short drawdown here of literally about 3 weeks. And then this is what's interesting. It didn't get to those former highs, though. You saw NASDAQ crawl through new highs. Bitcoin, no. XLC, not. Obviously, Meta has a huge issue with their AI spending and laying off people to help get ROI on that AI spending. I think they're also, in addition to laying off, I think they're frozen in terms of hiring, and they're happy with what they got essentially, and they have to make it work. What is good about XLC is this has been above 50 RSI since the ceasefire. So there's definitely worse places you can be than communications here. Today they are loving it, up 1.1%. I think so. A little mixed bag. If you don't have any tech, specifically, Meta, Google, different kind of AI plays, I like this one, but for about another week or so. I think this has a shorter runway, and I think it's going to run into that brick wall resistance of 119. As you can tell, that is right here where my cursor is. It has not had any interest closing above it, going back 3.5 months now. So to me, maybe like a spread. I do think it reaches, let me think about this, that 119, and then the buck stops there. You can buy, let me think about this. Oh boy. I don't hate the idea of selling the one. You could do a risky. You could sell the 115 puts. This is a little bit spicy. You can sell the 115 puts. And then also selling the 119 call. So therein lies you selling volatility on XLC. More and more of these plays have been coming, when I'm looking at charts. XLF, I suggested it last week. I believe that one would have worked. We'll look at the regional banks next, actually, to put meat on that bone. But here, you can sell the June 120, 114 half or 115 strangle. I think that will pay you. Again, still a rising 200-day moving average. I do believe in the support there, minus this purgatory here for 3 weeks in late March to early mid-April. This thing has held it the entire time. That's pretty much it for XLC. I do think it has a decent week, just not a ton of upside in terms of, thinking my target is 119. Otherwise, I would say buy the 120 August calls, but as soon as the 119 is met in terms of the target in, say, the next 5 to 8 calendar days, ideally, get out and exit. All right, and always do spreads. That is communications. That's what comes to mind there. Next, the regional banks. They're loving it today. Rates are, they had been moving crazy. I bought PFIX, which essentially goes with higher for longer, hence why I did that. And it made new highs today, 3 months, which is why the Turtle system got in it. TBT didn't make new 3-month highs, and also it's leverage ETF, so I don't love playing that game. TLT didn't on its own make new 1 or 3 month lows last I checked, so PFIX was the instrument for moi. Here we go to the regional banks. A nice move higher today, up 1.5% now. I think I said this last week in the call. This one obviously a little bit more volatile. You're looking at compared to XLC. This XLC touched their 200-day moving average for 3 weeks. This purgatory, right? Regional banks a little bit tougher. It did it last October. It does it last August. It was living under the 200-day moving average, if you recall, last June. So these guys, the regional banks, are poster boy for market stress. Essentially, they did peak February 9th at $74, way, but a month before the war. Seems like ancient history here. I think we talked about this the last week in the video. I like the support at 65.40. That's your 200-day moving average. I like this candle here as well. Looks like you have even decent second level of support, if you will, from this gap. Once it gapped up the day after the ceasefire, 3%. It looks like it filled it, and now starting to rise. I think this has a decent 2 weeks. My belief was this has to try and find a base. I said as low as 65.5, but I think it's even more constructive that it found its floor essentially at 67. I think this has a decent 2 weeks. I think it will be tethered. This is absolutely risk on. The only thing that gives me pause is I think the market is going to relax and digest these gains, so it won't be super risk on, although capital will rotate to other less loved areas, which Kerry had a not so fun 1 to 2 weeks. I think it'll be tethered somewhat close to 68.5, and I do think over the next 2 weeks this heads to about 70. I'll curb my enthusiasm. I think it's a $71. So I like the risk reward in that regard of $3 upside, ultimately $3 downside. So it seems like a wash, but I really do more so trust the support at 67. Therein lies $1 of downside and $3 of upside. And I typically like those odds. Trades that come to mind, I always want to give myself time. I would go out to like the August 72 calls if that's listed, and then I would sell ideally, I don't know if these are listed, weekly, stuff like that. I would go 3 weeks out and sell those 71 or 72 calls. But I do think this is headed to about $71 in about the next 2 to 3 weeks, in a little bit of relief. And that would be a big move. That would be about 4.5% in the stock. The only thing rather though, if you want to have more confidence in this, I would rather do it once you get a close above the 21-day exponential moving average, which would correspond with a 50 RSI. Let me know that there's more skin on it, more than just neutral. So that would equivalently basically be a close above $69 even, or 68.70 to be to be exact here. 68.61, right around there. We're getting close to it. They're loving it above VWAP. It literally just made a new high of day a couple of seconds ago. So that would be my trade. I'd probably buy some August upsides as soon as you hit that target of $71 near term. I would let it go. And again, above 50 RSI, you have a little bit more confidence. These moving averages shorter term will start to curl up. Algos will pick up on that. Strength feeds strength. So that's the regional banks. Those are your big movers up today. They're loving the UK communications, thanks to Google, and regional banks. Okay, let's look at the losers, and they're all from the crypto complex. Ethereum, my new greed. I was talking about this morning with JC. My new greed indicator is South Korea. Okay, the gens over there, Anyang always. Ethereum looks like dog crap, and that is a financial term. This is dog crap. Okay, so this is very close to actual Ethereum. This is the most liquid ETF. It is down 5.25% now. Ethereum peaked last August. Okay, last August. We're almost going a year now since those crazy peaks, and Ethereum, they're just absolutely liquidating it. And there's a couple different areas, times when you would have said, strike one, strike two. So Thanksgiving week was pretty important for Ethereum. And I would say when the the hot air balloon just went sailing away was January 20th. This really, we went under the 200-day moving average, and then the 52-week low came at the end of February, again before the war. This thing had a 13 handle. It's down 5.25% today. Now what trades jump out to mind? I don't like this here. I think they've bludgeoned it already. Don't forget, this thing looked like the bell of the ball, if you recall, in mid-April. This was at $18, and now it's broken under $16. Of course, I think this has a rough week, like 5 to 7 days left, and I think this is going to try and base. I'm surprised a bit. It's now in the 15 handles. I thought it was going to go as low as 16 even. Ugly candle today. View up is 15.97. It's 10 cents off that. Let's see if some buyers step in. Not comforting, though. The next chart is also Bitcoin. So Ethereum, Solana's getting smoked today. We're in a growth area, okay? And while inflation is going to be sticky, oil's probably going to be at 100 for a while. They're going to take a while to fix the Strait of Hormuz. Your Oreos, in a simple example, are going to be more expensive because the shipper is going to pass the cost down to you, the consumer. Hence, those CPI last week was the confirmation. This isn't like a new thing with the hot print. The hottest CPI in 3 years since May 2023. Okay, so this doesn't look good. I think this goes south for a bit. Does it get oversold potentially? Going back to basically where we were in those mid-Feb readings, trades. Same thing. These are going to be super expensive. You could buy. I mean, the 52-week low is 1362. You can go out to August and buy the 13 puts. Be careful; these are super expensive. Otherwise, just short the stock. The ATR is 59 cents. Let's round it and call it 60 cents. If it moves again to the other way, hence $1.20. So you short this right here at $15.90. If it goes $1.20 against you, so basically $17.10, get out because it could go to $19. Otherwise, enjoy because it very possibly is going down to that 13 handle again, and then move your trailing stops. That's it. That would be my play on Ethereum. I think the options are going to be super expensive. Otherwise, I don't think you're going to get paid, but you can sell the 18 calls. I know you're not going to get paid. What's the 21-day exponential? 17 quarter. Ugh. That would be the trade if you just want to short the ETF outright and then use your trailing stops. But Ethereum looks like crap. Let's go to IBIT. I'm sure what I said for Ethereum goes for IBIT, but let's get into this, the more liquid. Same thing. Like, look at the chart. So this peaked, Bitcoin, if you remember, peaked October of last year. We're looking at IBIT. It was $72. That is essentially 125K in Bitcoin. And then again, just because it's the go of assets, leading on the asset quilt since the white paper came out almost 2 decades ago, purgatory for this group was on election day, November 4th. Things started rolling over. And then, big thing to me, and look at this, it was the same day. The 52-week low was the same day the 200-day moving average started going south. So a big day, February 5th, which last I checked was the month before we invaded Iran. And now it's done all this noise. And my level for Bitcoin was I don't care about it unless it goes minimum. At least it's got to go more than 85K. Honestly, more than that. For the IBIT level, it's 52. I just don't care. It doesn't matter to me. This looks worse to me, in my opinion, just due to the relative weakness. I won't say relative strength versus Ethereum, but I see this. I know it's the stronger of the two, maybe even less, obviously less spec than Ethereum, but this looks worse to me. If Ethereum is about to get oversold potentially, and Bitcoin just crossed into 47 RSI, I think this is going south. I think this has an ugly 2 weeks, to be honest. If it can't, here's going to be your tell, and right now you're getting a little bit of that. VWAP on the day is 43.5. They said no thank you, down 3%. If it doesn't hold 44 even over the next 2 to 3 days, I think this is headed to, probability tells me this is headed to about 41.5. So what I would do there, similarly, you could buy the August 41.5 puts. You can sell, it is Bitcoin, you can sell the 47 calls. I don't think you're going to get paid much. Vol in this name is not quite the same as it was, even from the FOMO. Typically in S&Ps, folks get scared of downside protection, so puts are, you could check the derivative, I believe it's called Bitcoin volatility, basically their VIX. In the S&Ps, there is so much fear for protection that puts are almost irrationally priced higher. In Bitcoin, it is the reverse because folks have so much FOMO from the upside. So calls are extremely much more expensive than puts, but it's not the same anymore. Folks are not having the same type of lift. So while this looks constructive, this rally off of 37, I don't like the formations and what happened here after it filled this gap after this precipice fell off. Don't forget, it got down 7% on February 2nd. It filled that gap here last week, and now it's going wayward south again. I don't like the internals. I don't like the signals I'm getting from Ethereum. The internal system is primarily a long system, but I do pick shorts from time to time. Crypto looks like a short to me. I wrote an article 2 months ago about how I see a bottom for Bitcoin going to about 55K in July. I don't see a ton that's changed me from that. I really do think AI is at a little bit of a war with Bitcoin. I do think they need each other and they're frenemies, but it's interesting to see some of the old quantum names, Rigetti and all these other names, and they're doing, I don't want to say well, it just, Bitcoin looks sick and it's continued to be sick. And I chart Bitcoin the same way I chart sugar and South Korea and whatever. And this looks extremely ugly. And hold on, we have a contributor here that wants to contribute something. What do you want to say? He licked his nose. So ugly 2 weeks, I believe, for Bitcoin. I think Ethereum probably bottoms short term before this does. But I don't think Bitcoin's in for a good 1 to 2 weeks. I hope you enjoyed that rally. And that's it for Bitcoin. All right, only 2 big losers today. Sigma moves. Is Ethereum and Bitcoin. Let that show you something. And they're bidding the UK communications and regional banks. Let's go. Top 3 gainers of the past 5 days. I had a big thing today on the show. The reason they got me on, besides pushing my happy hours monthly, I hope you come out for it every month in New York. We're going to do it. You will find a drink in my hand and a chart on my phone and talking to someone. So look at this. Oh, I said 52-week high in the next 2 weeks. It did it this morning, y'all. USO did this morning. This is my big piece on Friday. I was emailing Spencer, the producer for Stock Charts TV. I think it's going to have a splendid 2 weeks. The market is calling BS on the end of this war and inflation not being sticky and oil being $90 anytime soon. No, I don't think so. Like I just said before about charting Bitcoin, sugar, South Korea, all the same. I do the same thing. Sometimes I don't even look at the tickers. I don't care. USO, this absolutely looks great. Also holding 48 RSI going back till the beginning of January, essentially, which is 2 months before the Iran invasion. New 52-week high today, y'all. We'll see who are the casualties. It's going to be a lot, but this looks like it's going to have a splendid 2 weeks. I'm long PDBC. I am very likely I will see if I'm going to pick up more commodities through oil, whether it be USO, or Brent oil, BNO. But this looks like it's headed to 154 to 155 in the next 2 weeks. This has been kicking SPY's butt since February 1st. This has had amazing chicken money flow, honestly, since Thanksgiving. Just great things to say about oil. Not much to say. Oh, the numbers up 9% over the past 5 days, or just inside of 2% a day, basically doing the exact same trend here. Looks absolutely splendid. Trades, you can just chase it right here, buy it. 2 ATRs is $13. You can get in right here at 150. If it goes down to 137, get out. That's simple as that. Otherwise, enjoy the gains should it go to 150. And then look up your pyramid rules. Richard Dennis is the GOAT. All right, number 2, and these are correlated, of course, XLE. These are the best ETFs in the past 5 days, including up to the second right here. XLE number 2, up 6%. So your alpha was more concentrated in the actual oil, obviously up 8.5% to 9% over the past 5 days. And here's XLE up 1.5% today, up 6%. Like I said, 1% a change average. It's doing just that here. Energy also, I believe, has a good 2 weeks. It's very interesting. Great looking candle today. I wanted to see if it can get above this noise here at 60 even. And today, a great looking hammer. 60.40 is printing right here. View up on the day is 59.93. They said mine. And the high of day was just about 20 cents ago. XLE looks good. I think it's got a decent 2 weeks. The only thing, though, I will say is I see new in terms of the chart. And if you've been watching me long enough now, hopefully you can tell how I interact with Bollinger Bands and vol expansion. the oil chart seemed just more probabilistic in getting the new 52-week highs. Obviously, it did it just today. Here, I am forecasting and foresee more vol expansion and rising tides lift all boats here. However, to me, it looks like this will still get tired at 61 even. I don't see the thrust that lifted you from this Dragonfly Doji on the 7th when a lot of rotations happened globally into other assets. I don't see that move going from 55 to 60 and then having another leg here. So this one, to me, would have to correct more so or appreciate more so in time versus price. I think it did it already. It's probably got to me another 60 cents or percent of upside after the 10% rule rally it's just had. And again, 6% in the past 5 days. Trades, I would just do the ATR rule. You could buy it right here. It's 134. So if it backs up against you, call it $2.70. Get out. Okay. Otherwise, enjoy the gains. I think it's got like a 1% further to go, to be honest. Otherwise, you could probably sell the 58 put, see if that pays you anything. Going out, 3 weeks is like the money, the sweet spot, in my opinion. But nice seeing those new highs finally get above this noisy period. And now it's back to where we were in early April. Okay. And then lastly, what they're loving over the past week is IHI or medical devices. So again, the leaders this past week were oil up nearly 9%, the energy sector up 6%. And then this group, what a piece of junk. They're absolutely investing into areas that did not get any love. So medical devices, a no bueno. This group peaked January 7th at, call it $65, and an ugly, ugly trough all the way down here to May 11th, just a week ago. Last Monday, this group bottomed at $47. You're getting a nice candle today, up 2.5%. It seems real for the day, and that VWAP is 49.30, and they're bidding it. It's actually hitting high of day just a few minutes ago. But this group looks absolutely tortured and terrible. Reminds me of, honestly, the Bitcoin chart to an extent, with obviously less volatility. The support had been a brick wall going into the highs at $61, and then boom, from false move come fast moves very quickly. I think this has a dead cat bounce for just a couple more days. Looks like to me this wants to hit 50 quarter to 50 half. It wants to head to that 20-day moving average. I think the 50-day is far too high at 52.70. So I think this has a little bit more to go. And then, to be honest, I would not be a massive buyer. It's going to correspond very likely with the 50 RSI registration. It has not held since late February, when the closest it's gotten to its flat to falling 200-day moving average. So I'm giving you a lot of content here. In terms of trades, I'm just not a believer. I would sell you're not going to get paid, though. It's super illiquid. But if you had to, I would sell the 50 half calls to 51 calls if that's available. Look at the rejection here, too, on May 7th, when there's massive rotation globally from other instruments, other areas. Just no interest at 50. Great looking candle here. You're getting very close. I think this gets tired soon. And don't forget, the rally started essentially a week ago off the lows at 48.30. Not a very, enthusiastic group. Investors really don't want to rush into this. I think, as I said, this heads into 50 half and then goes lower. So I would stay out. When it gets to 50 half, though, I would consider buying, like those 49 August puts, but more to come on that later. So for right now, you probably have a little bit more to go. The candle's telling me that. And that's it for IHI. Let's look at the top 3 losers of the past 5 days. Oh, my, uranium, the biggest loser. If you're in uranium, you're in the biggest loser over the past week. Today, down 3%. Over the past 5 days, it is down 15%, or an average of 3% a day, doing exactly that and touching its 200-day moving average. Yikes, for the first time since the end of March. Uranium peaked January 29th at $62, and here we are at $48. I am a believer. I'm gonna leave if I tried. This group, let it base. I do like uranium. I mean, look at the chart. It's had, 5 tags of the 200-day moving average since last May. So one day a trend does not make. But the rare earth metals, some of the things on the periodic table are not getting as much love. You got to understand, with inflation being sticky, the market's being pretty specific on what, they're liquidating and what they're purchasing right here. So this is very important here. I want to say straight lines, horizontal lines are many times more important than trend lines. So I obviously trust, or I'm not trust, but I look at this 200-day moving average at 49 nickel. but I also want to see where it actually is pierced, and it's $45. That takes us back basically this entire calendar year. So let it base. It's doing exactly what it's been doing for the past week, literally shedding 3% a day. So I don't want to hop in right here. And did it just hit low of day? Yes. So it's not finding love today. Let this one cool. And then I do believe it will bounce to $53. So wait for it. I'm not just outright buying puts here. This hasn't been oversold, by the way, I noticed, all year. So very strong performer. Very strong performer. We'll see. This is very important. It's the first time it looks like it's set to potentially close underneath the 200-day moving average since March 30th. If you recall, on March 31st, that month end, quarter end, it was very important there. So we'll see. I'd rather be a buyer in the bounce back after, but this is one that's looked very, very weak lately. This is more of a longer term play. Here from your appearance on the morning show, nice Metallica shirt. Yo, Chris with a beard. Thank you very much. If you got a ticker, put it in, rock on. Mandatory Metallica Mondays. You know it, bro. And that is it for uranium. I'd rather, like I said, wait for it to close above 49 even, and then maybe get a little bit more strength, get a pattern like this. And then you want to buy something like those August or SEP 60 calls. But, ease up on it. I wouldn't rush into this right here as it's being tested. Drawdown from 58 to 48 very quickly. Uranium, the worst place to be over the past week. Number 2, GDX. My big thing this morning was oil's going to new highs. It literally did it this morning. USO did. And gold miners, these guys are spending a ton of money. They have expenses. Energy is their biggest one, essentially. And gold prices are staying flat to basically not doing much, declining slightly. This looks ugly. Look at this candle right here. This is illustrated data visualization to you right here, right now. VU up on the day, 87.79. They said no, thank you. It's 1% below that right here, down 30 bips on the day. This looks bad. GDX, I think the trade might be over because if oil stays sticky up here, the Fed's not close to cutting anytime soon. More than likely, the first cut or the first move that the Fed does, Trump's new guy, Warsh, is going to be a Fed hike next year. So the Fed, Jay Powell, thanks for all your service. They were done as of Friday. That's going to be a money flow sell and a relative strength sell is what I'm seeing right here. I do not like this formation. I think this has an ugly 2 weeks. I personally don't have a trade on this just yet. I'm looking very closely. I think this is getting ready to go to $83. The 200-day moving average is 84.30. I think it's going to go, look at where my cursor is, right here, and get into this sticky area where we were in mid-March, where it was the only time it was oversold last year, or this year. So I think we're going to get into that environment again. If you want to be early, dude, you could do, it's going to be expensive, you could do the August 83 puts. I would sell something 3 weeks out, collect that theta decay against this. So maybe sell the, the 82s going out, June 5th, something like that, something 3 weeks out. But gold miners look bad with oil staying elevated. Understand this, how the market is repricing different, more than geopolitical risk, really just cost, supply, demand, benefits, ROI. Okay, so gold miners look really bad. Oil high, gold miners low with gold flat. It's just the input used for these guys. They're not having a good time with $100 oil. Okay, it costs a lot of energy to mine gold. Okay, also a lot of energy for Rocco to dig a hole in the dirt outside, doesn't it, Rocco? No reaction, nothing. Hey, nothing. All right. And then number 3, very close to this, and this is a great chart to put up. Silver down the same as gold miners over the past 5 days, 11%. Okay, but look at the chart. To me, more constructive. I know it's very messy, very noisy. Silver's insane, but this is still one of your year-over-year leaders. Last I checked, number 3. It's holding in better, but I do think silver, I said it before when I got my ticket to the cash tag award thing, I said silver was going to pop. It looks decent, and it finally had that massive rally here. And now look at the rejection here. Sometimes candles really stand out. This May 13th candle 5 days ago told me silver is not ready, nowhere near ready for $81. And what happens a couple days later? Boom, 69 handle print. So there's visualization here. It's like when you look at your weather forecast and, there's little umbrellas, you take an umbrella. It's the same thing when I look at charts. There's action to take, calls to action. Silver here, next 2 weeks, I don't like it. I think it wants to head as low as $63. Your gold miners will be the tell, plus what happens with oil. You're saying oil, silver. What does one have to do with the other? Just want to see where the risk appetite is. But this right here looks to me that the up leg for the most recent rally has concluded, and now this is going to be a 2-week digestion, if not, I don't want to say bear market, but 2 weeks of down for silver. And my call is minimum $67, where my cursor is here, but more than likely it's going to get to this $65 area and possibly as low as $62. So trades, again, the short term, I still believe in silver overall for the time being, but do understand I do see bearishness for the next 2 weeks. What could you do? You can outright short it. I don't know if that's some people's bag, but the ATR is 330. 2x is call it nearly $7. You can short it right here. If it gets above by $7, get out. If it gets $77, get out, obviously, because this thing's going the other way and it's going to rip in your face. Otherwise, enjoy the gains, because if you're short at 70 or $69, whatever, and it goes down to 61, enjoy. You just got more than 10% of the gains. Still right. The thing that gives me pause and why I say it's a short-term correction in a larger term up move is the 200-day moving average hasn't been touched. It hasn't been touched all year. I'm going back to last Memorial Day, okay? So an absolutely rip-roaring chart. It looks absolutely great. But 2-week bear market. Other trades, you could buy those August 65 puts, sell the something 3 weeks out against it, maybe like the 64s, 63s, roll down the strikes. It's going to cost you some money. Otherwise, you can also sell, those June 5th 79 calls. They're not going to pay you, though, because it's now $10 out of the money. But overall trajectory down, silver. All right, top 3 trades of the past 5 days. If you've been short's been the way to go the past 5 days. Short uranium, short gold miners, short silver. You've absolutely kicked this market's butt. It's pretty interesting because those are all, periodic table, metals related type action. And S&Ps, last I checked, are still at, 7,300. All right. I hope you enjoyed this. We will be back on Wednesday. I got the newsletter, LinkedIn newsletter. I'm actually importing that. I'm going to turn it into a Substack very shortly. And boopity boppity. Peace.